A lot is going on in the world of cryptocurrency. I'd like to fill you up on everything that has happened since Wall Street's poster boy went crypto in today's video. Bitcoin billionaire Michael Novogratz has issued a warning to crypto traders, claiming that altcoins are at a risk of another 70% drop, among other claims made by Suju. Many coins and tokens in the digital currency ecosystem tend to move in similar patterns. When the value of Bitcoin, the most valuable cryptocurrency by market capitalization, rises, the value of other digital tokens rises as well. When BTC falls in value, other coins in the space will likely follow suit. This pattern has held in recent weeks, as numerous cryptocurrencies have fallen even deeper in what has already been a difficult year. However, as zycrypto.com points out, something unusual has been happening. Ethereum and other altcoins have been struck harder than Bitcoin in general. The question here is, why are altcoins incurring greater losses than the most popular digital currency? Price bounces may be limited from a technical standpoint until long-term momentum improves. This could indicate a whole year of reduced stock and crypto gains compared to the robust increase in 2020. So while you're watching this video, don't forget to give it a thumbs up and subscribe to receive notifications when new videos like this are released. Short-term traders who do not commit to price trends can take long or short positions may find chances in volatile markets. Similarly, investors who are flexible enough to reduce risk can put their unused wealth to work in the next asset price cycle. However, price swings can be difficult to predict in the short run. According to studies, Bitcoin on average produces positive returns during instances of strong pessimistic sentiment. Following significant concerns, Bitcoin has also suffered continued sell-offs. As a result, you should not assume that purchasing into fear and sluggish momentum is profitable. A long period of accommodating monetary policy has sustained a robust advance in speculative assets, such as equities and cryptos. In recent years, Bitcoin, for example, has traded in 4-year bull and down cycles, yielding larger returns than stocks, though with higher volatility. Global investors are currently wrestling with the prospect of tighter monetary policy in the face of rising prices and declining economic growth in both traditional and crypto markets. This could result in declining returns. If inflation remains high for a long time, both history and today's high starting valuations suggest that most traditional financial assets classes will struggle to provide positive real returns. Mike Novogratz, the CEO of Galaxy Digital, has issued a caution to crypto traders, suggesting that altcoins might yet face significant devaluations. Altcoins are still at risk, according to Novogratz, who has nearly 500,000 Twitter followers. Even if they're already down, they're still down by more than 80% from their highs. More than 95%, another 70% of people believe bottoms are unsafe. The billionaire also has a pessimistic prognosis for the entire financial market, implying that crypto assets are going to fall in value. Despite all of this realism, the economic backdrop remains negative, and the crypto market is expected to recover soon. Because the quantity of human capital pouring into the area isn't slowing down, and the focus on building decentralized infrastructure that lets value and ownership flow as freely as information on the internet isn't slowing down, crypto isn't going away anytime soon. One way our community is resilient is shared belief in a new way of doing things and the assurance that comes with it. This strong warning to traders regarding a further 70% drop should be taken seriously, and many cryptocurrency projects will undoubtedly suffer as a result. But why should it be taken seriously in the first place? First and foremost, as you may be aware, not all altcoins are made equal. Some ancient currencies are better than others, and some that pump too aggressively or don't have as many fundamentals might drop another 70%, even though we've already seen a 70% to 80% drop. My other thought, and the reason I'm being so emphatic about warning people, is that if you watch the market as closely as I do, you'll be aware that Luna and the USD have recently collapsed, and Mike Novogratz was one of the poster boys for this, and now he's coming back to the market and saying, quote unquote, hey, there's a lot of risks. recognize the danger. Let's look at some potential triggers for Bitcoins to better prepare you for this. These 3 potential catalysts have the potential to set off a new Bitcoin bull run. Before we get into these catalysts, it's worth noting that Bitcoin has entered an accumulation range, implying that the decline isn't going to last much longer. So these are a few of the reasons why I feel we're in an accumulation range and why we're at or near the bottom of a couple of different things. According to Su Zhu, Bitcoin has experienced 7 consecutive red weeks, the most in its history, indicating seller fatigue, and second, the massive trading volume during the collapse of Terra and UST, which could signal surrender at the start of a trend change. The final evidence that Bitcoin is in an accumulation phase is that it has shown extraordinary strength against equities markets during evening hours in recent weeks. The S&P 500 is down 4.5%, while Bitcoin is up 1%. All markets are tanking except Bitcoin, which is exhibiting remarkable strength. The Mayer's multiple, an indicator that compares the current price of Bitcoin to its 200-day moving average to determine whether Bitcoin is overbought or oversold, is another signal that has caught Su Zhu's attention. He observes that the Mayer multiple is at historic lows, implying that Bitcoin is undervalued. Su Zhu further points out that during the Asia session, Bitcoin is trading at a premium. As a result, when Asian markets are in crypto, Bitcoin trades at a premium. Su Zhu also mentions some other indicators, such as an accumulation cutting closer to the bottom slashing at a trend change. The secondary signals are as follows. 7k Bitcoin inflows into the Canada ETF on the day of the low were underestimated, and miscalculated Tether FUD has returned. Furthermore, Bitfinex longs well through all-time highs, after which people begin to short Bitcoin to hedge private sales. However, these are merely secondary indicators. Now let's have a look at the 3 most likely catalysts that will set off the next bull market and explain them. The first is a meeting of 44 central banks in El Salvador. So one of Su Zhu's first catalysts is a recent meeting in El Salvador amongst officials from 44 different countries to discuss Bitcoin. The second is that OPEC countries are proposing to use Bitcoin and crypto for international payments. This means that the Organization of Petroleum Exporting Countries will accept cryptocurrency payments for oil purchases. 3. Commodities nations' sovereign wealth will be used to make allocations based on their theory. This third trigger, often known as a catalyst, is the likelihood of sovereign wealth funds from commodity-producing countries investing in Bitcoin. Any of them could set off the next bull run, but ETFs in the United States could also set off the next bull run. Both of these experts' assessments are correct in my opinion. There will be altcoins that fall by 70% or more, with many good altcoins falling between 30% to 60% and then rising again. Now let's discuss some recent altcoin news. Exchanges are being scrutinized as a result of the Terra fiasco. According to local sources, South Korean authorities are considering enacting legislation to subject crypto exchanges to tighter scrutiny following Terra's demise. According to the Korea Times, about 280,000 investors in the country are reported to have lost money as a result of the UST stablecoin and Luna tokens plunging to near zero in a matter of days. Authorities will also look into whether Do Kwon, the CEO of Terra developer Terraform Labs, used his crypto project to defraud investors. Crypto companies fight back against the new tax law. Representatives from the cryptocurrency industry are lobbying the OECD to have decentralized finance and non-fungible token transactions exempted from tax reporting laws. The OECD, an international group that represents the majority of industrialized economies, is attempting to enact new regulations to prevent crypto from being used to hide assets from the taxman. Digital asset businesses, on the other hand, argue that some crypto assets don't fit the same mold as traditional assets like stocks or gold, and that applying the same standards to them would be too burdensome. So far, I believe what Mark Novogratz and Su Zhu have both speculated. Also, we've all seen most of the reasons why Bitcoin is believed to be in the accumulation phase, why we may have already bottomed or are very close to bottoming, and what catalysts could set off the next Bitcoin bull market. Apart from the fact that more people are rushing into the crypto field at an alarming rate, there are additional reasons to be long-term bullish. Thank you for sticking with me to the end. I'm glad you watched it and I hope you enjoyed it. If so, please give it a thumbs up and remember to subscribe to this channel. Bye for now!